Hi and welcome to Westpac's end of day for Tuesday the 9th of August. Well, it was an absolutely wild ride on equity markets today ahead of the decision and statement from the Federal Reserve, which came out about an hour and a half ago. I'll run through some of the details for you. I can't hope to give you every particular number on every market, but believe me, there were some pretty significant moves. The initial response, movement on European markets was to trade a little bit higher when Ken Rogoff, a very well-respected economist, ex-IMF, ex-Fed, said that he thought that the Federal Reserve would need to put in place a further round of quantitative easing. But that optimism didn't last, and we saw markets sell off quite aggressively in Europe, partly due to some softer economic numbers. We saw industrial production figures in the UK that were soft. We saw a weaker export number in Germany. 2 of the last 3 months now we've seen exports out of Germany decline. That added somewhat to the negative sentiment, but the broader driving factor was this ongoing concern about the prospects for the global economy. Investors are still shifting from their previous view, which was that the global economy would be doing okay and that Europe would muddle through, to a much more pessimistic view on the US and global growth prospects, and the view that we may still see some sort of credit event default in the European sovereign space. But on top of that, we've now got elements of panic and fear and desire to cash out also impacting on the market. So the ranges today were enormous. To give you an example, the German market, the DAX, from peak to trough today, traded more than a 10% range. And it was something like a 7% plus range for the FTSE. The European markets actually ended, let's have a look, with the FTSE up 1.9%, the French market up 1.6%, and the DAX almost unchanged on the day, actually down 0.1%, despite those huge intraday swings. Those markets all closed, of course, before the Fed decision. Also before the Fed decision, we had some economic data come out of the US. We saw downward revisions to productivity. That reflects the downward revisions to GDP growth that we saw a week or so ago, but also a small business survey for the month of July. It posted its 5th consecutive monthly decline, and included in that was a softer reading on employment intentions. So another weak reading on business confidence, and interestingly, that survey cut-off was late July, before the big sell-off in stock markets that we've seen since then. So I'm sure we're going to see some much weaker business surveys, well, actually starting next week when we get the August round of business surveys from the various district Fed offices. And so on to the Fed. They acknowledged in their statement that the economic recovery had been weaker than they expected, and would likely continue to be weaker than they had been anticipating in current quarters. They continue to expect that inflation would ultimately fall to at or below where they're comfortable with, and they expressed disappointment with what's been happening in the labour market and the housing market and so on. Because of that, they've changed the language of their statement somewhat to say that they think the economic outlook will now warrant exceptionally low rates at least until mid-2013. That replaces the previous language, which was that they'd leave rates as exceptionally low rates for an extended period, which they've kind of defined as being the next few meetings. So they've made a much longer term commitment to keep rates at close to zero. And one of the consequences of that actually has been that banking stocks have done pretty well since then, because with that anchoring of low-end rates, it helps make banks make profits. It helps support their balance sheets. The initial response to the Fed commitment actually was mixed, but you always get volatility in the few minutes afterwards. But sort of 15 minutes to half an hour afterwards, we actually saw equity markets sell off in the US and bond yields fall quite rapidly. At one stage today, the Dow had been up 200 points. Not long after the Fed decision, it was down 200 points. Now, as I speak to you, we've still got about 15 minutes, 15 minutes to go, but I wanted to get this report done. And as I speak, the Dow's back in positive territory again. It's up 1.1%, with a broader S&P measure up 1.6%, and the NASDAQ up more than 2%. But with 15 minutes to go, anything still could happen, of course. Interesting to note too about the Fed, they did say that they were looking at all possible policy options to help keep the economic recovery going without specifying what they were, and said they were prepared to use them if necessary. So a bit of a fuzzy, opaque hint that there could be some further policy stimulus down the track, but at least initially it did seem that markets were a bit disappointed that they didn't get something more concrete than that. But as I say, as I'm speaking now, stock markets are rallying again. One thing also to note, there were 3 dissenters on the committee. Those 3 wanted to keep the extended period language and not shift to the commitment to hold rates low for the next 2 years. Now that's not a guarantee, of course, it's a conditional commitment. They say that they anticipate economic conditions will warrant rates at close to zero for nearly 2 years, but of course that, as I say, is not a promise that they're going to do that. Okay, so moving on, other markets, just looking at commodities, sort of half up, half down. Oil in particular down around 3%. When I last checked, it's at $78.98 a barrel. Remember, we were at $100 a barrel just at the end of July, so there's a 22% drop in the oil price just in less than 2 weeks. Gold hit a new record high today. It's currently at $1,768 an ounce. It has been as high as $1,780 an ounce earlier today. And copper prices are they're up about 0.25% today. Okay, so that's it. That's basically the story. Aussie dollar, which was trading at the very early part of today's session below parity, actually it fell to 99.5 US cents. It's currently trading about 1.015. So it's about 2 cents higher than its low at the very start of the London session. Other things to watch for, tomorrow or today Australian time, we've got Westpac's Consumer Sentiment Index coming out. This is the first read on sentiment, I think, of consumers or businesses anywhere in the world since we've had since the big sell-off in markets that's taken place over the last couple of weeks. We took this survey between Friday and Monday, and we're putting it out in a few hours' time. Remember, this was the number, this was the figure that was the trigger for us to shift from expecting a Reserve Bank rate hike later this year to ultimately now our current view, which is that we think the Reserve Bank will be cutting rates by the end of this year. And certainly developments internationally since we shifted to that rate cut view have very much, we think, supported our case. Okay, I'll leave it at that for now, but I'll speak to you again tomorrow.